Welcome back. This is the week that was, very first try at it. Um, as you can tell, it's a pretty rudimentary setup, so thank you for bearing with me. This week was wild. As you guys could tell, the only headline we had this week was basically oil, right? I covered it a few times in some previous pods, and they keep getting worse as far as the news goes. Let's see what else we got here. Uh, Oil reacted pretty much exactly as we thought. It got up over $100 a barrel, peaking somewhere around mid to high 90s after that spike. Let's see. The SP 500 closed around 66.72, down roughly 1 to 2% after week over week. And it tested the low 6600s today. The Dow Jones landed near 46,678, off about 1.7 to 2.9%. The Nasdaq sat in the low 22 300s, giving back 0.3 to 1.8% across sessions. The VIX peaked today at, let's double check, somewhere in the 27 area. Yeah, 27.19. And then after hours, it doesn't seem like anything's doing much of anything. The S&P is basically flat about 662. Wow. I mean, honestly, though, like, did you guys expect anything different? Let's check. What else happened this week? There were some bright spots. Energy names delivered. If you were positioned there, obviously that logic paid off. The defensive rotation we saw was rational given everything else was going on. Uh, Looking forward, the next big moves hinge on real developments, credible de escalation news. Now, the news is pretty tough right now because everything we're hearing is bad, but it's not bad, right? We got time to watch, sit on our hands, and see where this goes. I wouldn't expect to start putting a whole lot of capital into the market right now. I think there's some opportunity for more falling. Let's see. Because I mean, everything's got a bit of a downtrend going on here as far as I can see on the SPY. Once I can figure out how to screen share to you guys, I will. I have no idea what I'm doing. And this live stream was actually very impromptu. So what I was doing was trying to figure out the best way to start a live stream. And this is how it went. I'm sitting here in my office talking to you guys here on a Friday. Here on the Big Island is really rainy. There's a storm coming. I'm not quite sure if you guys can hear the rain outside. Makes Waimea real nice, though. It's been a real wet year. Let's see. So there's a lot of growth opportunity coming up. The markets have a bit of an asymmetrical opportunity in a lot of places because this is a lot of news dipping, not really fundamental company flaws. So whatever you have high convictions in, this could be a time for you to start watching for a decent sized dip. This week was my unveiling of a lot of content due to the fact that I, like a lot of other traders, are sitting on our hands, just kind of waiting to see how the markets go. And luckily enough, it started the week pretty uncertain. Now it's pretty much certain that we're heading for a downtrend. Um, my favorite part of the week was the history of money. Please check that out if you guys get a chance. Uh, I come across this great story about Benjamin Franklin and how he would invest, how he invested for a 200-year outlook. Imagine that, trying to look forward 200 years and expecting to still have money by then. Thank you for joining me, whoever's in here. Oh, never mind. It's okay. Let's see. All right, so the micro S&P or the S&P index is what I trade a lot of the time, and it looks like we're starting to head towards our previous low area where it kind of dipped off earlier or later in the year last year. So it looks like we're heading for that. It's a pretty critical area. So if we start to kind of see some breakthrough of that kind of 660, 655, then we're going to start seeing some real downtrending, which gives us those opportunities for those dips that we're looking for. Um, a lot of people pump out the dips as far as go buy the dip, but what is the dip for you, right? You have to look at where you started. What is your appetite for falling? Like you have to expect your stock to fall 50% in a year. It does that. That's just part of the game. So this is a real opportunity, like a true blue opportunity to buy a real dip. Let's see here. Bitcoin got over 72,000 in the week. We might be trading a little bit higher at the moment. Let's double check actually. All right, currently Bitcoin price is at 70,900, off the weekly highs, but it seems like it's holding a nice position at that 70,000 mark, at least for the last couple days. There's a lot of volatility going on, so it's interesting to see that money's moving towards cryptocurrency. Like the last few days, we've been seeing a lot of movement, which I love. Right, it's great for myself as a Bitcoin holder, as well as a Robinhood shareholder, because they're pretty much tied together. Now, the last couple of days they kind of decoupled as far as uh, sharing the same chart, right? It kind of just follows the same trend. It seems like there's a little bit of decoupling the last couple of days. We're getting some inflows towards safe dividend, low volatility stocks. So we can see that as far as the movement goes over the market. I hope you guys got a chance to check out the spring attire or the new attire from Robinhood. They got some hoodies, some hats. If you guys saw in the previous pod I made in the week, there's a chair, like a $3,000 chair. I'm somewhere between why and why not, right? Maybe F with it. Now, I try to follow a lot of statistics myself because it keeps more of an even keel on the mind when you're trying to trade, especially when it's violent and you're new to it. You don't really know where or what will affect your overall performance. So, as you get better, you can kind of vibe better. But until you get there, I would recommend sticking to statistics. There was a post earlier in the week that if you keep it simple, the first hour of the market is green, you look for a green daily candle. If the first hour of the market is red, look for the red daily candle, right? So it tends to follow that trend, the first opening range of the day. So if you look at the opening range, I mean, for me, I have to check it a little after the time I wake up, I don't know, 6:30 to 7 o'clock in the morning, which is about halfway through the trading day for the rest of the country. So I kind of have to go back and test or back test the early part of the day to see what is happening. Uh, so if I want to put some trades on for the rest of that day, or if I want to put some trades on for the following days, weeks, months, whatever that is. It starts with the opening range for the day and the VIX. See what else we got here. Uh, all right. So back to oil and the overall geopolitical conflict going on. There's not really a big way or an easy way out of this. We're getting mixed news in regards to if there are mines or no mines in the Strait of Hormuz. Uh, Please correct me later on if I'm pronouncing that wrong. I have no idea how to speak Iranian Farsi. Check me on that later on too. But as far as the overall geopolitical atmosphere around it, we're really getting a reminder of the overall power of the petrodollar and how that still affects the overall markets as a whole. Now, companies are not down. I mean, the companies that are down, right? That's their fundamental flaws. But the overall market is down. The S&P is down about 3.5% for the year so far. But so there's an opportunity for a bounce back, but we have to wait to kind of see what clear signals we can get over the next week, um, over the next month, maybe, because we got to see some real clear de-escalation in the overall conflict before we can start truly positioning in bigger and bigger. As Steph Guild would say, who's receiving, what are the resources, and what companies are recovering. So you got to look for those three R's when you're looking for any kind of dip. Diversifying is a strong motivator this year. I think a lot of people are looking into trying to hedge right now or trying to protect themselves. They don't really know what's going on, but there is some opportunity there to find little nuggets of gold, right? You keep flipping rocks and you find something there. And sometimes it pans out, sometimes it doesn't. But the more rocks you flip, the more opportunities you have to turn something small into something great. Not quite sure the carryover on the mic. We'll learn this afterwards. This is my very first time doing this, so thank you for bearing with me. Let's see what else is going on here. Now, it's back to the mines. There are a lot of different types of mines, and it's kind of a like a poor man's way of making a lot of problems because it's a fear mostly. Like mines don't take up that much space, but if you don't know where they are, they could be anywhere. And if there are a few there, fine, but they don't know where they are, so that makes the overall strait closed. I'm seeing a lot of different ideas on how they can go around the strait or through the UAE. It would take a long time. I covered this in a previous pod, but I'll keep it short. If they were going to start cutting a road or start delivering oil across the desert, Mad Max style, you're going to get a much longer downtrend, I guess is what I'm going to say. Because it would take a long time. We're talking months to years to build a road that could go that far. Like, I know this is a lot of times satire, but a lot of people are catching momentum like, hey, let's just go around. It's not quite that simple. And if the strait is closed for that long, then we have a bigger problem. There's nothing that can really catch up right now. I mean, we can ramp up resources, or we can ramp up the reserve output, but we don't know how long it's going to be till they clear everything out or ramp up operations enough to compensate. So the the overall future price of oil could be staying up for a little while. We don't know where it is. It got as high as 116 on the futures, as low as 85, 80-ish. It's stable around 90. If it stays there, I don't know. But we need to find some stabilization so the markets can figure out what to do. Another thing we covered this week was the drone warfare. Now that's a pretty interesting take. A lot of people kind of freaked out. Oh my gosh, California might be hit by one-way aerial drones. Yeah, that's real scary. But we're gonna get a lot of notification ahead of time if that's even remotely possible, because the distance on these drones are like 1,500 miles. You can do the kilometers, 2,200 or something like that. That's pretty far from where the U.S. West Coast is, which is about 7,000 to 8,000 miles if you drew a straight line from Iran to the West Coast. So they would have to deliver these drones closer before they could utilize them. Um, and that's the big problem because if they're going to bring these drones closer, that means they would need teamwork with other countries who probably don't want to touch this with a 10-foot pole or somebody else's 10-foot pole. And the opportunity for exponential retaliation from the US is just way too big of a risk. Like a single drone landing or crashing or targeting and hitting American soil, I'm sorry, that's it. Then we end up with a much bigger problem. So we don't know if that's going to happen, but I highly doubt it's going to get anywhere near hitting American soil because of the distance on these things. Now, I've seen opportunities where they could maybe drop it out of the sky, like via plane, or they would have to truck it or boat it closer. But if that's the case, the Pacific Fleet is real strong. As a person who lives in the Pacific, military, the U.S. military presence is very strong. So we would be able to detect these drones from a long way. So that was more of a news swing, which is good because I mean, until we get some clarification or we can see some movement in regards to actual transporting these drones closer, I don't think it's possible. Let's see what else we got here. Oh, in AI, Obviously, Anthropic, Claudebot is still very popular. Everybody's talking about it, and it's making waves here in the Perplexity stand front too. They're about to introduce a new version of the personal computer that runs on secure environment but can be controlled from anywhere, letting AI agents operate across your apps instead of just chatting in the browser. Now, I'm getting this from Sam Badawai. Ooh, correct me if you catch this one there, Sam. He's from Wolf Financial. If you don't know anything about Wolf, you probably shouldn't be in this live chat anyway, because Wolf Financial is probably the best way, the fastest way to get as much information as you can about the current atmosphere of the stock market and any market. They have a Bitcoin, they have daily traders, live stuff. Go check them out. So as far as Perplexity goes, you can just plug in your Mac into this thing, and the infrastructure just kind of pops up. The computer isn't just a tool anymore; it's the actual operator. Now, for me, that's not super important. I don't have a whole lot of digital media stuff going on, but maybe it can run the background for or run the editing for all of my videos upcoming. I'm not quite sure. Uh, I'm a solo mission here, so it can be a little bit difficult at times. All right, what else we got from the week? Let's see. Prediction markets. Yes, let's get into that for a second. Um, as you guys know, prediction markets is huge right now. It's how a lot of companies and traders hedge their positions that they already own and have, and those positions can be kind of balanced out with these prediction markets. Now we're getting banks inflowing into them as far as using them as hedges and utilizing them more mainstream wise. And if you see banks moving towards something, it's a strong indicator that it's going to be sticking around a while. Prediction markets tend to accurately gauge the whatever outcome that it's trying to predict. It's actually really fast. It's way quicker than actual analysts and other types of data finding individuals because it's got money behind it. Right? People got skin in the game, and that data comes in faster and a lot truer. From political markets to how the oil prices are going to go. I mean, it's back above $100. I mean, you can check the markets and see where it's going to go by the end of the week, the month, and then you can hedge it that way. If you know the gas prices are going to go up in your area, you can hedge the prices. So you can buy the yes, and if the yes goes up, you make a little bit of money to compensate for the overall growing gas prices, right? That's the hedging way to do it. Now with prediction markets, it's risky, right? Like any investment is a risk. So don't go over there throwing rent money at it. You got to go over there and think about it. What will grow as something that I currently have might drop in value? Let's see. All right, what else did we miss in the week? Now I'm over here checking X on my other screen here, so thank you for bearing with me. Okay. Now we're getting a lot of Jim Cramer information because he's all over the place. Uh, as of 5 hours ago, he said Jim Cramer says he's buying stocks, um, and the market is oversold. So the inverse Cramer is always in effect. So I don't know. He comes out with information so quickly. I'm sitting on my hands. I'm gonna just watch you guys lose money right now. I'll push my calls and my puts out farther in the week, and I'll keep intra week trading my my index options. But ugh, I don't know what Jim wants to do out of that. All right, let's see if there's anything coming out in the news at the moment. Now, while I'm trying to find some info here, there are some other great YouTubers that you should follow. If you're following me, you should follow obviously Wolf Financial and all their stuff. Roy at Crossroads. If you don't already follow him, that man has got the most even keeled information you can find. You can also go with Tevis, right? I can't remember his thing right now. I'll throw it in the comments later on. And I'll think about some more for as I'm going through this here. Let's see what else. Hi, welcome. Anybody who's joining me in the chat, please subscribe. Throw some questions in here for later on if you've got any. I'll do my very best to answer them, or AI will answer them for us both. All right. Oh, yes. Don't forget about Tanner, of course. Future investing. Man's got the skinny on a lot of SoFi stuff. I know there's a lot of SoFi bulls out there. Right now, SoFi's not doing super well, so who I hope you guys had some hedges on that. It's down in the 17 area, but it's an opportunity, right? Now, on the SoFi front, it is a bank, right? So it's interesting that a bank has this much volatile swinging, but once it stabilizes, I can see SoFi being easily 40, $50 by the end of the year. Their usefulness is there. Their ability to track where money should go and be for the millennial and the upcoming generations and what they need. They're great at that. Let's see. Oh man, nothing but open claw. There's nothing but lobsters all over the internet today. For me, I don't see my use yet. I'm seeing a lot of people being able to trade with them, or seeing some news that you can trade with them, or set up a bot to do trading. That would be interesting. I'm hoping the next 5 or 10 years we're going to see overall integration of that into apps I already have. So I don't have to go buy another device to fill up my desk and my counter space. It's already integrated into a computer. It goes and finds a server. The server's run by a bunch of agents, and then I utilize those agents wherever they are, right? That's the direction we want to go. But as we think about AI, that brings up a good, interesting thought for me. Energy is super important for AI. Um, we think about cloud as this clean thing because it's called a cloud, but it's kind of a dirty infrastructure, buildings, electricity, concrete, all this metal. It's not as pretty as the cloud makes it seem. But these data servers or data centers need a lot of energy to run. And the more complicated our overall AI use goes, the more energy they're going to use. So we're going to see a lot of inflow into the energy sector as AI grows, because you need an equal amount or more energy to pump out um, more information, right? Because everybody has need for this powerful stuff. But I can't imagine how big a computer would be if it had to run a full AI server out of my cell phone, right? And technology will get smaller over the years, and we'll be able to get it into smaller devices like this one day. All right, there's a lot of let's talk about Robinhood Ventures Fund. Let's see here. Let me pull it up on my. So if you don't know, Robinhood Ventures is a capital ventures fund that's open to everyday investors. Welcome. Thank you for joining me. Please leave any questions or comments if you have any. I'll take hate too, because I'm sitting here in the dark, right? So, uh, three people watching. I appreciate all three of you. Thank you for joining me. Uh, let's see. All right. So back to that. Let's see here. RVI. There we go. All right. So this is the first overall trading week of Robinhood Ventures Fund. It is now closed at 23.62 for the week, which is not bad, honestly. Like, it was a hairy week for a lot of us, and I was expecting this to be a lot worse. It got as low as $20.20. So if you're looking to buy Robinhood Ventures after IPO, it that was a good opportunity at $20.20. Let's see. So if you don't know about Robinhood Ventures Fund, I have some information on some previous pods that you can check out. But the low and skinny of it is that it is a capital venture fund for private companies. So you can invest, and then they take that money and invest in these basket of private companies that they selected. And as you know, that if you were to invest in private companies before they IPO, you have a strong opportunity to double, triple, quadruple, 10,000 your dollars. Like, there are stories I've remembered that people buying Apple pre-IPO at 10 cents, and all of a sudden they go into the public market and they're making oodles of money, right? So, but that kind of thing was restricted to a lot of regular people, or all of us, because of the accreditation needs for you to actually become a venture capitalist or invest in a private company. So I'm excited for this. This is an opportunity for some strong exponential growth. It's kind of wrapped in a closed end fund. Um, Price action wise, that's what I'm kind of going to keep a strong eye on. Um, Robinhood Ventures one, I don't know what kind of price action I'm going to get out of it. I don't know what kind of swings. I don't know if it moves with the market or against the market. So it's important we just keep an eye on the price action as we dollar cost average into this, because it very well could swing very wildly. I mean, it's supposed to. That's why private uh, private company investing is a risky business, and that's why they want you accredited so you don't lose your money, I guess. But you should be able to lose whatever money you want to lose. If you didn't do research in something and you lose that money, it's on you. I'm sorry. Like, you got to do your homework. There's no crying in the casino. You got to go outside and cry. All right. So RVI did good. I mean, it closed back up pretty high. It seems to have a weak support of this kind of 23 area, which is great. So we'll keep tracking that for the next week. Coming in next week, speaking of that, we close the day kind of red. So I imagine Monday's going to open just a little bit green and then rip our faces off. Or over the weekend, we might get some news from the administration that will pump the markets just a tad. We'll see on Sunday when the overnight futures come in, how to position, if we're going to position. Honestly, with the amount of uncertainty going on, you and me are going to be dealing with, or you and me are going to get to know each other pretty well. Because while this is kind of in a choppy slog fest, I might as well make you guys some content. Uh, Bring you guys as much information as I can so you guys can get your investing journey started strong and wisely. It's all about the long outlook. Money doesn't really disappear, it depreciates over time. So your job is to find assets that appreciate faster than it depreciates, to keep it real simple. But if you got a long outlook, it's really hard to lose. So the investors who find something they love, park their money, forget about it, tend to do a lot better than people like me who are doing this every day. Now I've got my finger on the pulse. I make a profit enough to pay my bills, but I'm no stretch of the by no stretch of the imagination am I a master at this. All of my learning was from losing money. So as I've lost enough money at this point and gained enough money, I've gotten a system, more or less. Everybody has to discover their own. But now I have the opportunity to share some ways that can prevent you from losing some of that money that I lost as well. And one of the biggest things is curbing your appetite for violence. As a person who tends to be a bit fearless, I just go for it, right? Money is a bit trivial to me. I can make more of it. I'm pretty young. I can risk more money than people who are older, because my overall goal right now is to learn how this works. Trading is not an easy game. There's no opinion that can get you out of it. You make money or lose money. It's a pass fail type of thing. So if you fail, you lose. But if you lose, you should learn. Now, if you keep losing the same way and not learning, you might as well just burn the money now. But if you lose and learn, and the next time it happens, you make a different pivot, you adjust, you stay nimble and bouncy, then you tend to make a lot more money, right? Keeping your emotions in check, um, staying nimble, keeping your head on a swivel to see where there are opportunities is how you keep your head above water in this market. Because you don't want to get into an emotional slump of like, oh, I lost a bunch of money. Oh no, I'm still losing money. It's like, no, change your position and try to find a different direction. Because if it's already trending down, it might keep going. It may not. You might sell the bottom and then poof, it goes up. But it happens. You do that enough times, it really doesn't matter. Thank you for joining me. Please leave your questions and comments in the chat. I'll get to them either today or further down the road in my next stream. As I'm getting through this and we're about a half hour in, I can see the acclaim. This is surprisingly fun. I spent a lot of my career talking to individuals behind the chair as a hairstylist, and it really, really pushed me into trying to dig into people, right? How people function, um, their emotional choices, and how that affects their overall lives. Because when I can find that, then I can pick a perfect haircut for your lifestyle. Because I don't want to give you something complicated when your overall lifestyle doesn't have that time frame. It's the same thing with trading. You got to find your overall lifestyle choices and your overall risk appetite to be able to make any money. Because it's you got to stay still to make any money in any kind of market. You got to watch, buy or sell, and wait and wait. And curbing your boredom is by far the most difficult part of trying to be a trader, is learning how to be patient and bored and just going for a walk, right? I listen to spaces every day to see how the rest of the community is feeling, and they feel about the same as I do, a little bit lost, um, kind of just sitting on their hands a bit, waiting for a good, clear signal of direction. The long term traders, they're just buying stuff because it's a great opportunity. Their companies aren't doing poorly. The market is overall poor. So you can kind of dollar cost average a little bit more into that. Um, I don't see any hate for as much hate for bears right now. On X for a while there when we were riffing, everybody was just like bear market, bleh, right? Hunt down all the bears. Not anymore. Those bears are making so much money, but bears don't tend to post. Like I would love to see more perma bears um, post their trading strategies. But bears, maybe they're a little bit quieter. I don't know. They take a lot of hate from the bulls. I'm a person who likes to make money, so it really doesn't matter bulls or bears. I just want to make some money for myself, my family, my goals. So it really doesn't care what I don't really care what the market is. I have some long term stuff, some medium term stuff, and then I have my alpha portfolio, which is what I do, which is my day job basically, and talking to you guys. Let's see what else is going on in the market today. All right, did I miss anything? Oh, Robinhood's Take Flight was this past week. So Robinhood unveiled a lot of new. Let's see. I'm gonna pull it up just so I'm not wrong about it. Robinhood pulled up a lot of new stuff for the overall market. Let's see. Now I'll get better at kind of talking and looking at stuff. So forgive me. I'm vamping while trying to find something. Um, Imagine the Jeopardy song is going right now. Uh, let's see. Here. Here we go. Got it. All right. So Robinhood unveiled a lot of merch, as I covered earlier. They unveiled custodial accounts, and those custodial accounts have a gifting feature. I don't know if any other companies have that. I don't have any other brokerages. But this gifting feature is pretty tight. So if you were to open up a custodial account, you can either have Robinhood Strategies manage it. I have a decent portion of my allocation towards Robinhood Strategies because the team and the people in charge of that have done nothing but good by me since inception. But as far as the Take Flight goes, they unveiled custodial accounts and gifting. So with gifting, what you can do is you can, even if you're not part of Robinhood or you don't have a brokerage account, you can share a link, and that person can basically gift your child a stock or an ETF or something that or who knows, they can do treasury bonds too. I don't see why not, because as long as you can trade it, I imagine you can send it. I haven't gotten to the whole figuring out the total yet. I mean, I don't need anybody gifting my son any stocks right now. So let's see. Here we go. Right. So they got custodial accounts. Lots of they got trust stuff coming up as well. That's real big. If you guys don't have a trust already and you guys are making a lot of money and you don't have a trust yet, please look into it. My God, it's just an easy way to protect yourself, your overall legacy, and there are some tax benefits as well. So look into, and also just even if you don't get into a trust, get a will. My goodness, like you can't be running around out there without a will. It's bad for you. Like, what if something happens? You don't want your stuff to go into probate, right? And writing it on a napkin is not how a will functions. All right, let's close this up here. I'll let you guys get back to the rest of your day. All right, let me just see if we got anything else. All right, no, I think that's it. All right, thanks for tuning in to my very first live. Please tune in next time. I will actually schedule it, so it's not just a surprise. Thank you for the viewers who tuned in today. I really appreciate you. Like, subscribe, and I will talk to you soon. Let's figure this out. Aloha, mahalo, farewell, ahui ho, and I'll see you on the porch.